The IRS is trying to use PIN numbers now and stuff, so, again, those are things that you can do, but let's talk about what you can do at your company, what you should be doing, because I'm believing all of you are good people and you don't steal. So let's talk about that. That's true, isn't it? Okay. Discover that their assets are not well protected as they thought, and they become victims of employee theft. Small business environments where you guys are in charge. You're the only one. You're the only one. We trust you. Please take care of my books. Some places it's tough because there's one person. One person. So you as the business owner or you as the employee, what do you do? What do you do? And so we think accountants become the highly trusted employee of the company. You become the number one person at the company. They trust you. Trust you totally. Okay? So the best way to safeguard is to say that you've got weaknesses and to sit down and talk about how you're going to correct them. So what are some of those ways? And that's what we're going to do. Here we talk about job site, small tools. It's kind of funny, but we did work on a company, a large general contractor, and I can remember the owner of the company standing up in front of all the people one day at a meeting, and he said to all of the people that work for the company, he said, all of you should have a complete tool shed by now.
At home.
At home.
At home. Yeah.
You've stolen enough tools from me that you should have a complete set of tools, and if anybody needs any more, let's talk about it. But after this date, we're done. We're going to watch what leaves this job site. Okay? So you've got tools, small tools that you buy for jobs. Watch it. Watch where they go. Watch your people.
Another place in our area, a lot of these guys will make money by taking the scrap. They'll get the money off the scrap because you as the owner may not know there's a lot of scrap. So scrap seems to be a big deal. What was it years ago that was big? Copper? Did you guys in copper? Or people were stealing copper and taking that? That's right. Because they pay in cash.
Yep.
Right. So construction materials.
One of the biggest things, the first one there where people steal is labor. I actually have a client, and what they did is they went to one of the payroll services, and everybody has like a fob, and they got to check in, and it's about a $30 million company. They figure they're saving $400,000 a year in time that was wasted before. So I don't know how you control your guys on the job sites. They get there 20 minutes late, take an extra 15 minutes for lunch,
right,
leave 20 minutes, or they're the foreman, and they let the guys go. How do you guys control your labor on the jobs?
How do you do that?
Because that's expensive.
And our office is right across from a bar, and usually on Fridays at about 3 o'clock, there's a lot of pickups at that bar.
With your name on it.
With your name on it. So how do you control the labor? How do you watch labor? How do you know where your people are?
Like Stephen back here, because you're in the purchasing guy, right? Can me as a project manager order anything ever? How do you make, because I know a lot of guys won't let it because they have this deal with the suppliers where they get a little bit back. So I know a lot of people, only the office can order.
Yeah, whatever they want does have to come through us, so we do keep a pretty close eye on that. To me, about the superintendents would be the bigger fear is them developing relationships with the subs and not holding them accountable.
Right.
And me in the office not having a good eye on
Right.
what their quality or what's actually going on.
Not knowing that relationship.
Right, and they're just making decisions based on friendships and telling me, hey, we need these guys because other guys are falling behind.
Well, I've seen guys it's not that you see it, but I know some guys who will say, hey, you give me a lot of work. How about if you come with me down to Florida? So you don't see it. So I say, I'm going on vacation, and my boss doesn't know it, but basically the guy's taking care of me. So does anybody get any of that? I've seen that more and more with contractors. Just little things like that.
Booze at Christmas time.
There you go, yeah.
We're always giving bottles of booze.
Yep. So do you ever see any major kickbacks from anybody? Have you ever seen anything like that, or is it just entertainment? Pretty much that's all it is entertainment.
So
okay?
it's wrong if it goes to the project managers instead of you, as to the
I think what Stephen's saying is, because we have that relationship, I might not get the best guy out there to do the best
Right.
job for you. Is that what it is?
That's
Yeah.
Right.
Yeah. It's not that it's really wrong, it's just that we got this relationship, so hey, Stephen, I need to use, this guy because he's the best, when maybe he really isn't. Yeah.
We always say in our industry, it's not important for us to become best friends with the controller. It really isn't. necessarily a good idea that we like each other. Our job is to do something for the owner. You and I don't like each other necessarily. We don't have to we get along, but my job is not to say good job when you're not doing your job. My job is to say you need to step it up. My job, our job, is to work for the owner. So if you have a CPA, that's playing, having fun with your staff, well, that's not the relationship generally. It's got to be independent. If you see a vendor hanging out with your guys and buying them booze or taking them on fishing trips, that develops that relationship that could lead to, and it doesn't always happen, but it does. It leads to that relationship where, oh, Bob's okay. Bob didn't do a good job. Bob, you're okay. And then the super says, oh, Bob's okay, I'll get it fixed. And what happens is it gets sloppy. Then it gets wrong. Then it gets bad. And then you got to change. And you don't want that to happen. You want everybody to do their job and you want to pay them fairly. So look for this stuff. Okay, good system of internal control starts with the control environment. We always say, if you cheat, if you're the owner and you cheat, they'll cheat. That's where we start.
I have a good example of that years and years and years ago, a contractor, and what happened was he went to his bookkeeper and said, hey, give me $5,000 and charge it to this job, whatever. So she would, or, pay for my condo in Florida. Well, lo and behold, later found out that she stole about $400,000. So every time she would write a check to him and send it to a job cost, she'd write a check to herself. So it's like, what do you? She goes, well, if you turn me in, guess what I'm going to do? I'm going to turn you in because you taught me how to do what I just did.
So what do you do? What do you do?
It was not a good thing.
We've seen it happen. We've seen relationships having an affair. We've seen all that kind of stuff. And what we see, what we look for, what we find is that you guys create another job cost account. You go to the plumber and tell the plumber to charge it to count 1065. And that's another job, and you don't charge it to your job, okay? And then what happens is you don't pay cost, you pay less than cost. And the funny thing about this is everybody thinks they're getting something, What do you think an IRS agent thinks of builders? What do you think the number one thing, when they come in to see you is that they think you're going to do? What's the number one thing they think you're going to do?
Where are they? Because they're hiding something, right?
Where are they hiding their house? Where are they hiding their mother's kitchen? Where are they hiding their daughter's new garage? Where are they hiding it? They really do. They're on it. They've been there. They know what you're going to do. They know how you're going to do it. So fraud, it starts at the top. Again, if the business owner does it, people do it. It seems to be almost a natural thing. It's not a right thing, but it seems to be what they do. Anyhow, so lead by example as a business owner. You as an accountant, you as the bookkeeper, you as the controller for the company, lead by example. Make the owner do a T&E report. How many of your owners do T&E reports? How many of them do T&E reports?
Travel and
entertainment expense. Here's a receipt. Here's a report that says on this date, I went to dinner with Bob and Carol Smith regarding new home contract at Chi-Chi's restaurant. How many business owners do that? 1, 2, 3, 4.
Now, didn't they change the rules? Can't you now write it on the American Express bill?
American Express
Didn't
bill.
they do that? Isn't that relatively new?
So you got to do
think
that.
you can.
But now recently they've said, okay, American Express bill or your credit card
Visa,
statement,
whatever.
as long as you write on there who you entertained and what you discussed, that's considered a valid receipt.
It's called contemporaneous receipts is what you got to keep.
So that's okay. But these business owners don't do receipts. You have to require receipts of everyone. You as the controller have to demand that. If your project manager submits a receipt, you have to demand that they give you receipts.
The other thing the IRS looks for is it's like, okay, you own a business, how can you drive 6 cars in that business?
Right.
It's one for your wife, one for your kid, one for your mother-in-law. We have seen that where it's like, how can you have 4 different cars or 8 different cell phones? There's some people here, what you pay for your cell phone for your entire family? Isn't that right? So they look for that kind of stuff. So those are other things that they look at.
And so, and your guys, your field guys, okay, they got trucks. On Friday, they fill them up, right? They fill them up on Thursday, too.
Wait, how many of
Who's
you
to
guys
fill
let
up
your
on
guys
Thursday?
take the company trucks? How many of you guys have company trucks? You know, it's funny, where we live around here, and I know Jim, like, there's a lot of lakes. So I went to a buddy's place, Round Lake, Devil's Lake, about years ago. And I came home, and I saw two of my clients, and their trucks were there over the weekend. So I said, I didn't know you guys did residential work. Well, they were doing side work with his tools, his materials, and his truck. I mean, you probably see it all the time up there. That's what they do. So that's another thing to control what they do. And you also got to make sure that they don't let their kids drive your vehicle. And I think if you give them your vehicle, aren't they supposed to sign some insurance waiver to prove they have insurance? I mean,
They should.
They should.
They should. But they should. So, I mean, fraud is a lot of things. Fraud is using the truck the wrong way. And not only is that fraud, or not only is that misallocation of funds, but it's liability.
Right.
That's the problem, is liability. It's the liability that's associated with the guy taking the booze that was given to him by the plumbing contractor, drinking the booze at 3 o'clock on a Friday afternoon, driving home and hitting a kid. That's the problem. Then you're sued as a business owner, as a business, you're sued, and what happens is it causes a mess because that employee was essentially using your asset inappropriately. Fraud. Stealing something that you had given him as a benefit. Okay, so you got to make sure that they're insured. You've got to make sure that there's policies. This is your job. You've got to make sure that the owner does this because owners don't think about this stuff. What is your policy with company cars? What is your policy with vehicles? What is your policy to record that on their W-2? If they have a company truck, they've got to report that as income. Are you doing that?
Which
Has
is
your
very
accountant
simple.
told you
It's
that?
called a $3 a day rule. So what's that, $780 or $720? Just put on their W-2 and they get a free vehicle. That's not a bad deal.
Okay? But it's a control. It's something that says to that person driving that truck, that employee, that says, when you use our equipment, this is how you will treat our equipment. When you drive our equipment, this is what we expect of you. We expect this insurance. Again, internal controls are a system of things that are required for good business practice. The purpose of them is to make sure things are done right. The purpose of them is to make sure the company makes a profit. The purpose of them is to make sure things are done in an organized, structured way so that it reoccurs and the process continuously happens, and that makes things go well. The redoing of the same thing over and over again the right way is a good thing. And that's what we're saying through this entire thing. So everybody, you have to participate in this control process. If you go back and you see your owner not doing expense reports, you need to make sure that they do expense reports. If you see the owner taking aggressive advantage could be, I just heard one of the most aggressive advantages recently, but it's fun to listen to, but it's travel with family and wife and kids and everything. That's, you know, sometimes these people do this stuff, but as long as you put in systems and you tell the business owner you went too far on that one, you went too far on this one, you set up a system where people do it right. And when the owner does it right, the people that work for the owner do it right. When the people that do the work for the owner right, and you're doing the books, it's right. You feel better about it. It's done right. There's more ways to cheat with smart knowledge and tax knowledge than there is with theft. Mm-hmm. There's more ways to save tax dollars.
You can do it legally.
What system of controls does the company have? Segregation of duties. A lot of you are small. You're the only person in the office that writes the checks, controls the checks, reconciles the bank, does the receivables, does the work in process. It's really hard to control that, to have somebody else check her work, but we should. How should we do it? What ways, if you were a business owner, would you control this person being in control of everything?
Well, here's what we always say. How many guys are the business owners here? Raise your hands. Okay, keep your hands up. How many of you guys have looked at your bank statement in the last year? It's like,
3, 4.
right? They don't do
Isn't
it,
that
do
amazing?
they? They just
No,
don't
it's
do it.
amazing.
Do
And
your
you
owners look at them?
I-
Do they? Okay.
We ask that the bank statement be sent to the owner's house. We would ask that the credit cards go to the owner's house. That's not true, is it?
She's pretty honest, Vance.
Yeah, pretty too there.
You know,
That's
we
pretty
said this
hurtful.
once, and we have a friend here, And he did that, and his controller stole $400,000. He knew when the bank statements went to the owner's house. He went and intercepted him, took out the checks that he stole, put it back, and put it in his mailbox. Yeah, no.
I mean, but
I don't sign checks, though. I write out the check.
Okay, and I'm assuming none of you guys have the check stamp.
No.
No, you don't let them have
right,
that.
nobody uses
You
a
did. You
check
got
stamp.
rid of it.
A year ago, yeah.
Yeah, you can't have a
Right.
check stamp. That's
But,
a license to steal.
But when you have one person doing everything, what would you do? How do you watch what they do? What are some of the things that you guys think you should do? What would you do as an owner?
No, here's some of the.
What would you do?
I would check the bank statement like as for us, I see every check.
Right,
The bank electronically scans them in, so I
Right.
check to make sure all my signatures are on there. and
right.
everything else.
But you know what I've seen, Brandon? Here's what's good. I see you guys at Builder 20. I don't have a check stamp, but the controller may need some checks, so I just signed 30 blank checks before I left. We've seen that.
But we see that. What else would you do? What else would you do if one person was doing it? What? Two
You
signatures.
just, problem is you can't get them.
Get what?
The second person to sign a lot of times. That's
But I mean,
what we've
that's
seen.
but that's a
what
great idea. What else would you do?
We have somebody else make deposits.
Yep.
I handle the.
Great, great idea. What else would you do?
Staying in touch with the cash flow statement, if we do that weekly, you kind of have an idea in your head what money's coming and going. I mean,
Right on.
it's not a perfect solution, but
Cash flow statement. If you do it, you really kind of understand what's going on. If you did a budget report, like we talked about yesterday, Dave said if you did a budget, what would happen? You're comparing the actual to what you projected it to be.
Here's
And
the
if you
bigger
notice a
thing
big
we see.
variance-
Here's the bigger thing we see, though. All you guys have credit cards because you want the air miles. We've seen more fraud with credit cards because you guys put a boatload. We had a guy one time, let's say his credit card statement's like $103,000 a month. So the controller comes in and gives it to him. Well, when it pays the bill, it's like $103,900. What happened was his controller had the same credit card, and she'd charge $500, $600 a month. Well, he'd forget.
Right.
Took about, she only got like $10,000. But I mean, because you're going to forget that kind of stuff, because we see more theft with credit cards. The other thing is, if you allow somebody in your office to be an authorized signer, like American Express, Visa, MasterCard doesn't have to cover that because you allowed them to use your credit card. You gave them the authority. So be careful with that.
What else would you do? She's the only person handling all the disbursements. What would you do? Cash receipts. Someone else writes the checks?
You know
What else?
a big thing? Make her take at least a 1 to 2 week vacation a year.
Yeah. Yeah, she's
No,
sitting there going,
no,
okay.
no, because we had one lady, that's why she stole money. She didn't take a vacation in 30 years. Why? Because she was stealing money. No, force them to take a vacation more than 2 or 3 days.
Yeah.
What else would you do? Ideas. What else would
What's
you do?
that?
Vacation and business expense?
Jim, is that vacation a business expense because we forced them to do it?
Going back to the credit card statement, Nicole always makes me go through it. So I look at every transaction on the credit card and then I sign off on it and give it back to her.
See, but I think on the credit card issue, you're very diligent about running the internal office. Sounds like a lot of people are not. They're bigger, and they're busier out in the field in sales. You still are holding on to that office thing, and that's good.
And bad.
And bad. She said it. I didn't. But I mean, it's good and bad. But it happens. If you spend your day looking at bank statements, you're not spending your day managing the job. So there has to be other things that we watch and do to make sure that controls are there. Go ahead.
We actually got rid of our credit cards, so the guys just have gas cards and home Depot
Right.
cards.
I mean, and we're seeing that. We're seeing people getting rid of company vehicles, and we're seeing credit cards. But I don't think that's real long-term. I think credit cards are going to be the way we pay in the future. I think that's going to be the way. And QuickBooks does a credit card reconciliation right now. So, I mean, QuickBooks has a credit card reconciliation system now built into it to actually reconcile it.
Well, here's a problem I see. You guys don't get your checks back, so how do you check your checks? Can you get them online?
No,
He-
they
Is
can't.
that what they do? Is that what they, okay.
You can request.
You can request that because so most of the bank statements, it's just it doesn't say anything unless you request it. You have to request it. And I'm sure the banks will make you pay for that in the future. That'll be a paid feature.
The other thing
Okay.
we're seeing is a lot of people trying to ACH into your account, so really, really be careful with that.
I fear that that's going to go to the way of it's just not going to be required anymore someday. The bank is going to say you're responsible for it. You check it every day. You pay for it, check it every day, it's your responsibility. I think ACH transfers, wire transfers after 1 day are your responsibility, not the bank.
I know there's a quick
24
turnaround, yep,
hours.
Yep.
You know, PNC, we do positive pay.
Yeah.
Right,
That's the same thing she's describing.
In a
Right.
sense, yes.
right.
If,
Did you
okay,
hear that?
all you guys
Banks
should
are
do that.
using positive pay. They have systems where they look at what your disbursements are.
You pay all your bills, and then they get, what, a PDF or whatever. Here's all the bills we pay. They don't pay anything but what we just.
What he says is these checks can go through. This batch can go through. If something's outside of that, you can get a text actually on your phone right away. So
Right.
all banks have that's called positive pay, and it's very good because I know some guys will say, you know, I forgot to send this batch through, or tell them, and boy, I got a text right away. It's like, yep, that's good. But I have heard that somebody told me in one of the clubs, if a bank offers positive pay and you don't do it, they aren't responsible. Now I don't know if that's true or not, but that's what one of the
Makes
guys in one of the
sense.
clubs told me.
Makes sense.
Did they tell you? They did tell you that?
Makes sense.
If
Makes all
if
sense.
you don't take advantage of our internal controls,
Then you're, yeah, we can't
Right.
have this fraudulent.
What else would you do? What else would you do? One person doing everything. And how hard is that to do, to make a business owner sit down with you and look at the financials? That's the problem.
Audit periodically, you do
And-
six-month
and-
reviews or something.
And you could do that. You could have the accounting firm come in, and she used the word audit. We don't audit anything, but we would come in, you could have somebody come in and look at it. What we see sometimes is that the owner of the company, be it a male, let's say, would hire his wife to come in and review the transactions.
well,
Okay.
the other way where I see a lot of fraud happening, and I'll say this, business owners, the accountants license to steal is through journal entries. When's the last time one of you business owners looked at one journal entry?
Or understood it.
Right.
Yeah.
That's a
Right.
license to steal through a journal entry.
Absolutely.
Okay? So all journal entries, if that made sense to you, all journal entries should be approved by the owners.
But she said they could, but they don't know what you're
So
doing.
but that journal entry that you told us about yesterday, that's something. Something's there, we just don't know what it is. That should have been approved.
Or went to
And it
capital
wasn't.
stock versus shareholder loan.
and it
Or
wasn't.
additional paid in capital. Yeah, that's odd.
What else? What else do you do that's unique?
Has Vance ever
What
looked
else
at a
do you
journal
do?
entry?
He doesn't even know how to get on QuickBooks. What my fear is that he's like, you should feel lucky that I trust you so much. The fear is that if something does go wrong, and I
Whether it's
don't
your
know
fault
why,
or
it
not.
wasn't-
Well, that is, and that is the real fear, because
I'd rather have the check.
as an accountant, as a bookkeeper, as a controller, if they don't pay their payroll taxes, if they don't pay some of these sales taxes, they're gonna come see you. They're gonna think you're together with them. They're gonna think you're the one that's not doing it. He could sue you and say, you're not doing it right. I mean, that's what's really going on. You are in you have a critical responsibility to the company. And what we're saying by doing this is that you are also making the owner responsible. You're saying you need to participate with me in this to make sure it's done right. You need to make sure. What else can we do? What else?
I've got a question. I've heard of a service called Bill.com. Has anybody
Yeah.
had any experience with that?
Yeah, you submit to them the bills to be paid, they pay the bills, and then they charge your account an ACH withdrawal to cover the bills paid.
Right, so like an owner or whoever would approve with an app,
Right.
approve, disapprove?
Very much like positive pay. Very much like positive pay.
I've not
Interesting.
dealt with that ever, so I.
Interesting.
Is that a bad, I mean, you start thinking somebody in California is running all this stuff through, Puerto Rico and.
Well, it's kind of like a payroll service. What if you send them a check, and what if they didn't pay those vendors? And what if they do that for 2 months, and you send them $200,000, and they go out of business? You know? Does your vendor say, wow, you paid them? Okay. No, they say, I don't care who you paid. You owed me the money. So we've seen this with payroll services. But there are situations where only one person does it. And one of the greatest things you can do is you should go back and ask that you're bonded by the owner. You should go to your insurance company and say, I want to be bonded. I want you to take out an insurance policy on me that says if I do become insane and I start stealing, that you have a policy that will reimburse you $300,000, okay? Because what happens is that the insurance company will put that person in jail. The owner might not. The insurance
Well, they'll
company,
prosecute.
They will prosecute. They will go after you. They will be very aggressive. They will do everything they can to get that money
Now,
back.
one thing I'll tell you about the insurance, that's what
it.
he's talking about,
That's
employee
right.
dishonesty.
But employee dishonesty, if you read the endorsement attached to your policy, so the business owner doesn't read the policy, right? But, right, you do, but he doesn't. But employee dishonesty is included in your general provisions of your policy. But it usually covers $25,000.
Right. Now, I do have a client, and this is where you gotta be careful. He had the employee dishonesty thing. So the employee worked for company A. He had like multiple companies. She was stealing from company B and C. The insurance company said you only had the insurance on company A. So if you have multiple companies, say it's covered by all of them. I didn't know that, and he's really irritated the insurance company. But it's like, well, she worked for all of them. So if you have multiple companies, make sure they're covered for multiple companies if they would do something.
And there are different levels now, too. One
Right.
is just general dishonesty, one is bank
Right.
fraud, and one is records procurement,
Right.
things like
Sure,
that.
credit cards.
And they usually have about a $10,000 deductible,
Right.
and they only cover $100,000.
Yeah,
Right.
that's the
And
most
so-
we saw is 100 grand. You're right.
Right.
That's the most we've
So,
seen.
try to get as much, and that's generally an endorsement. We want, bonding is that employee,
Yeah.
they're saying that they're good for $300,000. And again, if a claim is filed, you as a business owner, you're gonna look at it and you're gonna go, well, God dang it, pay me back. The insurance company won't be so nice. They won't be just pay me back. They'll say, we're gonna go see this person in jail. That's
You're going to
their
pay me
intent.
back and
Set
There-
up the bonding, is it-
your insurance
insurance
company.
agent.
Go to your insurance agent.
so you can say, I want to bond my bookkeeper. I wanna
Right.
bond
Anybody
my
who has access to cash.
Right.
Problem is, I think you should go further. Anybody who probably has access to cash and credit cards. I mean, years ago it used to be cash. Now it's got to be. I don't know. As Jim said, read the description because I don't know how it's written. I really
Right.
don't.
Right. So again, that's part of this whole process that we're talking about, internal controls, financial statements. You need to go through your insurance policies. You need to go through your contracts. You need to go through everything to make sure that all these things we talked about are covered. What else would you do? Anybody else do anything different?
Over here.
I took a few forensic accounting classes in school, and it basically said, the perception that the owner is there and is watching is more powerful most
It
of the
is.
time than anything
It
you
is.
put in place.
It is.
the
It's
fear.
it's
The fear.
absolutely the knowledge that you're looking, her knowing that you're looking is a powerful thing. It's a powerful thing. But if you're one of those owners that don't take a look at anything and you don't care to look at anything and you trust her to do everything, she's just sitting there going, I want to go to Tahiti.
Can
Can
we have Van stand up and be the poster boy?
Huh?
Can we have Van stand up and be the poster boy?
Yeah, he is. He will be. What else? Anything else that comes to your mind? Because I'm going to go over some other things here. But, here's some of the things. This is from Wells Fargo, and I was online, and we're going to send to you some things on credit card fraud, but it says, always monitor your employees, screen new hires carefully, and train them. We talked about that. Always know who you're hiring. And that doesn't mean talk to them. That means find out where they work. That means look at their records. How many people do a record search on new hires? Not many of you. Okay? So when you hire somebody, take a look at where they've been and what they did, because that tells you an awful lot about them, and they're not going to tell you. They're just not going to tell you.
Jim, can you do a background check
On what?
Like on their credit check or something
Yeah.
like that.
On their personal financials?
Personal credit. I think you can do a personal credit check. I think you can do
That's
that.
part of it. They sign a form that says, I hereby release to Weber O'Brien the ability to do a background check on my files. Here's my social security number. Here's my DOB, date of birth. And then Weber O'Brien hires a company for $150. They go to all the courthouse records. They do a search. They look for any complaint against them, felony, misdemeanor, anything that's filed against them. They look for anything that's reported. DUIs are reported.
But do they check your credit?
Absolutely.
You can check the credit on a person.
If you're gonna rent an apartment for $500 and they can do it, why can't we do it? And
I think that's separate.
Pardon?
Isn't that separate from this? I think it's a separate check.
You can do a separate.
What state are you
Yeah.
in?
Well, it's a background.
Yeah,
And that may
background's
be that
different.
Specific to that state. That may be what,
Criminal.
that may,
Right. No, but isn't the background check different than the credit
that may
check?
be.
Two separate things.
That may
Yeah,
be
that's
what,
I meant.
yeah.
Yeah.
Each state is different.
Yeah.
If somebody's like in
Yeah, we have a consent. We get a consent form.
I think those
Okay.
are two different things. I think one's a background check and one's a credit check. So you do write two separate things you can do.
It says lock away all important documents. Makes sense, right? But, you know, who you kidding? You're in charge of it. So, I mean, you got to have the key, right? Monitor the movement of employees. Monitor where they go, what they do. All right, update signature cards. Easy to do, right? Review and revise accounting processes periodically, always making them better. Fraud reduction tools, electronic-based products online, as we talked about earlier. Conduct audits. Again, I think if you're a pretty big company and you're an owner, I think you should go in, the owner should go in and take 10 checks a month and look at them. Look at the purchase order, look at the receiving report, look who signed it, who approved it, look at what job it went to. You should know what's going on. Again, if the owner participates in the process, I think everybody sits back and says, "Ooh, they're looking. Ooh, they're thinking." You know? All right? Contact your business insurance. You know, all the same stuff, pretty much. Yeah.
What about third-party audits? Like, is there any?
Again, I think even when we do an audit, and I don't want to say this because, you know, yeah, we do audits, but even when we do audits, we do not audit 100% of the transactions.
So we do a sampling.
We do a sampling of 24, 50 items. If those 50 items show an irregularity, we found it. But if they don't, and we didn't pick the right one, it won't show.
But that's helpful, right? To let people know you're looking and.
Very much.
It's all the mindset. That's exactly right.
The accountant should know what your systems are. Your accountant should understand QuickBooks. Your accountant should take a look and make sure you do budgets. Your accountant should be sitting there participating. The accountant should, I mean, I've got a client that hired a person. Every one of her answers are just odd. I don't like it. I'm on alert. I'm cognizant of the fact that I don't like the way she thinks. Okay? I've told that to the owner. I've said, I just don't get the way she thinks. I don't understand it. Something's weird. Look at her stuff. Look at it. I mean it. And he says, well, you're looking at it. I go, no, you're looking at it. It's your company. You look at it. You look at the bank statements. You look at the checks that were written. You need to be responsible. But yeah, audits might work, but you might have the CPA come out and look at 20 transactions, 10 transactions, but you could do the same thing. Give me every 10th check this month. I want to see the detail on it.
But if you have a CPA and a bookkeeper, should you get a CPA from somewhere totally different to do an audit?
Well, if you have a CPA and a bookkeeper, you should make sure that there's segregation of duties there. You should make sure that they're
You're
not
talking about
buddies.
an outside CPA.
Yeah, like,
Yeah.
wouldn't you want to just get someone totally unrelated? I mean, is that?
You
could.
could, but the problem is that an audit, when they sell you an audit service, it can't always necessarily find fraud.
Right.
People always say,
Right.
I had an auditor, why didn't they catch this? They're not going in and looking at every transaction like a forensic accountant or a fraud.
Right.
accountant would do.
Right.
Just telling you, hey, we're giving you a.
They're materially correct.
In the statement, material,
Right.
you know,
Yep.
that your statements are materially stated in their product. That doesn't mean they're exact.
Right. I get. Right. What you can do is maybe it's what we call agreed upon procedures. Do certain things. That's it. But it still doesn't mean you're going to catch it.
It is a step you can take.
Yes,
It
it
is
is.
a step you
Absolutely,
can
it's a step
take.
you can take.
But yesterday, I think Dave asked all of you, how many of you get an audit? Anybody?
Are you? No,
No, an audit
I'll say that.
from
You
the
guys
CPA.
probably. You guys
Anybody?
have to, right?
You do?
Ashley, don't you guys get a review? You guys
Compilation.
probably get an
How
audit.
many of you get a
Yeah.
review?
Yeah.
How many of you get a compilation?
Yeah.
I mean, so at least some process, but a lot of times CPAs just do a tax only. And with the tax only, they look at what you do. They don't necessarily test it in great detail. We We test it in great detail, but that's because Dave and I are afraid of everything you guys do
But-
half the time.
Well, and also with your tax
you don't
return.
know what you're doing half the
You know,
time.
your tax return is probably on completed contracts. It's not even what a financial statement would look like.
Right,
Yeah.
right.
Yes,
We-
Steve.
We've been around builders long enough that we know that you don't have a high degree of respect for numbers. So we
He's
kinda
got a
get
question,
it,
Jim.
and we look at it.
We have a CPA, and really, we just use them for tax purposes.
Right.
For the most part, we do our own internal bookkeeping and all this. What do you guys feel is fair compensation for a CPA for companies like us? I mean, I'm sure people are paying all over the board.
30,000 a year.
I was gonna say 80. I was gonna say 80. I looked at him and I said 80, 80. How do you look at me when you go to build my house? You look at me and go, let's see, his wife is gonna really, 400.
I was told you guys increase the house by the neighborhood they live in.
Right, or their job description. Yeah, I didn't know what you're doing to us.
Okay, go
I
ahead.
mean, you guys can be hired over and above the CPA who's doing the
Right.
tax.
Absolutely, yes, yes.
That's what I
Right.
mean, so generally, what should we be thinking?
Well, talk
as
about it. What do you guys pay for a compilation?
Well,
$25 million company, we pay about $9,000 a year.
for a review,
What is it for a compilation tax?
compilation and tax
Basic,
return,
basic
you're getting a
preparation.
pretty good deal.
That's a phenomenal deal.
Oh, okay.
Phenomenal
That's
deal.
just
What do you
Lamar
pay?
Smith Signature Homes. Oh, okay.
Tax return.
Yeah, but you probably do everything.
$7,000 for a tax
Right,
return
you probably
only.
do all the
What do you
work
pay?
papers, so you.
What do you
I
pay?
was gonna say you probably have the draft financials and say, here, just do your general
Six.
procedures. Is that right?
6,000 for a tax return. 6,000 for a tax return?
Well, but you're a little
9,000?
unique compared to most of these people.
Five-ish? So
Because
you
like I
just
said,
heard
you-
it.
you know the
7,
drill.
6, 9, 5. So in that range?
Next level where you guys come in and start looking at monthly.
Here's what we do. Well, we got it right here, and we'll pass it out. We have a service for most people your guys' size. You guys are too big. You guys are too big for this. It'd be more. We charge $275 a month to do a monthly financial statement review. You send me your information, and we'll look at it, and we'll have a monthly call. But a lot of it's more management stuff to say, hey, what happened to your margins? What
Right.
happened to this? Why don't you have any work? I think Kelsey has something she can pass out here.
Right.
But that's a great service that we do with a lot of people, and it's worthwhile. And what it does, what we're trying to do, is help you out. And a lot of it's clean up the books, so when you give it to your CPA, they don't have a lot of adjustments anymore.
For 10 or less, you could do that and get your.
I would assume, yeah.
If your
Yeah.
books are good, if your books are done right, you know? Right.
Because we may have somebody like Jamie also in the back help you out because I say, hey, your QuickBooks are a mess. Let's have her help out because I can't do that. You know. But that's a fun thing to do, and it forces you as the owner to look at your financials monthly. If nothing else, that's what,
Right.
yeah. We got to set up our next meeting. Okay, Shannon. So I'm gonna-
Obtain
I'm
bonding,
gonna
we
be
talked
emailing
about
you.
that.
I'm gonna
Review
be
bank
emailing you to make sure you
reconciliation,
get it.
signature stamp. Don't use a signature stamp. I don't think anybody uses a signature stamp anymore, period.
Well, the other thing, payroll, do direct deposit, use a payroll service. I mean, in our firm, we got two ways to get payroll. Either you don't or use direct deposit. I mean, that's it.
People do direct deposit real quick. It's about the only way. Cross-train employees, again, if you have a CPA on staff and you also have a bookkeeper, make sure that they're interchangeable, make sure that they segregate their duties. Okay? Check signing privileges, dual signatures. We went through this. Check sequence, make sure that they're in order. Cash disbursements, make sure that everything is attached to the check. Okay, so you have invoices, you have POs, you have the job number, you have approval vouchers. Make sure you have a little system that makes it
This is where appeal system works.
right. Okay, make sure that the amount of bill that you're paying is reasonable in light of the estimated bill that you were going to pay. Make sure, check up. Cash receipts, make sure that you make a list. Have somebody else do it. Who said somebody else does it? Somebody here said somebody else does it in their office.
Well, that's in our office. We have the checks come in. The lady who is our bookkeeper does not get access to the checks. And we get a
Journal
list
entries.
every day.
Journal entries, make sure that the owner signs the journal entries. Again, some of the things that we're telling you are to protect you from somebody thinking you did it.
Right.
If you make them do a system that's well done, you are less likely, because the CPA, who's the first person we blame? Your accountant. Your accounting staff. They stole from you. That's the first place we go, and it's a bad conversation. It's always an embarrassment. It's always a bad conversation. Always, okay? Again, bank statement reconciliations, make sure that the owner signs it. Make sure that he gives you the bank statement. Make sure that you do the reconciliation. Make them initial it.
Well, read the first sentence there. Give it to him unopened.
Right. But make the owner sign it. You looked at this, Bob. You approved it. You saw what I'm doing. I'm doing the right stuff. I'm doing it. Okay? Prepare them timely. Yesterday we asked how many people are doing financial statements by the 10th of the month, and not many people in this room really raised their hands. Really raised their hands. 10th of the month, 15th, 20th at the latest. Get it done. Set up a system that makes it get done. Learn how to do it right. Do it right every month. You'll
When do you
get
guys
into
have
the
your
system.
financials done? You're a big company.
25th, following month, actually,
And what are your guys' revenue every year?
about 120.
Yeah. So that's not bad.
You have them done by when? The 10th. Okay? So, I mean, you got a big company, you got a small company, 10th. I would look for the 10th to be an important date that you should be able to get it done. Everything's in, all the billing's done, right? All the payables are in, all the billing's been done to the customer. You know what's going on. If the vendor hasn't given you a bill, you've already called them up and said, where's the bill? They've already asked you to pay them, right? So get it done. Get it done. That's one of the best things is having a system that works every month. Investigate unusual items, job site purchase orders. We talked about purchase orders the other day. We say to all of you, you will save 2% purchase orders. If you put in a purchase order system, you will save 2%. It is phenomenal what it does. It will save you money.
He asked, is there software? Doesn't Builder Trend or Builder MT do?
Builder Trend does.
Yeah. And I think it integrates with QuickBooks, doesn't it?
Payables through Builder Trend, and then it transfers over to QuickBooks.
And you guys tend to like that, don't you?
Yeah.
Builder Trend?
Yeah.
Okay. Okay.
How many of you take advantage of vendor discounts on your system? Do you do it every chance you get? You take it. It's important. Okay, again, that system, who reviews and approves, who initiates purchases. We talked about who can order something. Who can order? Can everybody order it? Yes. You said yes, but you got to approve it, right? Stephen said, they can order it. Who are you kidding? I can't get in the way, but I got to get approvals. And I'm sure big things require big approvals. Okay? Okay, job site project management. Again, this is just management of the job site. Make sure that that everything's right. We have people that have told us that lumber purchases are coming in with different quantities of lumber now than what they ordered, more or less, and not what they asked for. Again, you've got to check what's been ordered.
heard that in
You've got
roofing.
to check what's been received.
Isn't
on
roofing
job
the
site.
same way? They might give you the wrong quantity, so you got to check
Yeah.
that to make sure you get the right quantity.
You check what it is. We don't check quantity that they dropped off. Again, work in process schedule does it all. It really is the key schedule that you guys have. Scrutinize job losses, payroll. We recommend an outside service. Everybody uses an outside service. Is that correct? Pretty much in this room.
Some people do it
No?
internally. They still do.
Okay.
How
We
many employees you
recommend it.
got? How many employees you got? 30? For that, I would really look into an outside
Wow.
payroll service. We use an outside payroll service. We won't do it internally.
Right. They're more efficient than we are. So, I mean, I think it's something to take
And
a
the
look
other
at.
thing, what I like with all the new rules, and Jamie's our bookkeeper back here, when you recommend an outside payroll service with all the stuff coming at us,
Right.
that's when they'll do all that ACA stuff
Right.
and all that, right? Well, they'll do all that where we don't
Right.
have to worry about it. And
You're talking-
especially, you're in Ohio, so you got all those darn cities like we do.
And you're sitting there and you're talking about you want management information, and they're spending time doing payroll. You want management information, they're doing 30 people payroll. What's the benefit?
And I'm
What's the
assuming you
cost
pay
benefit?
weekly, right? Yeah, that's a lot of time.
That's a lot of time spent doing payroll. Okay? Report time daily, payroll again, credit cards. On credit cards, we just wrote up something recently. When you get a credit card statement, review it. Again, like a bank statement, review it. Look for transactions with PayPal. Look for strange transactions. Look for things to be, did you order some jewelry last week? Did you order some hair extensions? I don't know. Maybe that's what you see, okay? Review gas charges by employees. Like we said, do you see somebody filling up their car on Thursday and filling it up again on Friday? You know, do you see something happening like that? Have it mailed to your residence. Don't use too many credit cards. We tend to have tons of credit cards, right? Too many credit
We
cards.
need the air miles.
Minimize the credit cards, okay? Don't let everyone use the credit cards. I don't really buy into not having credit cards. It just seems to be a way of doing business. I recommend procedures over them and limiting the number of cards that are out there, okay? Again, reconcile the general ledger accounts monthly. You as an owner that are in here, you guys should make sure that they reconcile accounts monthly. You as a bookkeeper, controller in here, you should reconcile the accounts monthly. Why? It's your job. When we come into a company and we see accounts not reconciled, we always see cash reconciled, right? Everybody reconciles cash. We got to know what cash is, right? The owner looks at cash. But if we see receivables aren't reconciled, if we see payables aren't reconciled, if we see debts not reconciled, if we see draws aren't reconciled to the work in process cost report, if we see accrued payroll not reported, if we see accrued vacation not reported, if we see interest not tied out to the interest paid, if we see tax expense not tied out to the taxes paid or the taxes we instructed the client to pay, we look back at the bookkeeper, the controller, and we say, what are you doing? What do you do during the day? You need to reconcile these accounts. It's pretty easy. It's QuickBooks. Hit the button, right? From, to, what period. Print out what you did. Make sure your descriptions are clear. It should be reconciled. It's easy to do. So we expect that. We look for it. If we don't see it, we sit back and tell the owner, we just don't know why things aren't being done. We want to see that done. We expect to see that done if you're good at your job. Okay? Journal entries, again, get them to sign off. They will blame you. When they blame you, they call us up before they blame you, and they tell us they're going to blame you. Then you see the accountant come out and say, so what did you do last month? Let me see your cash receipts and cash disbursements for the year. Let me have your QuickBooks file access. Let me take a look at your GL data for the year.
Right now.
Give me these accounts right now. It's not a friendly transaction, and it doesn't have to take place. Make the owner responsible. Do your job. Do your job responsibly. Write-offs. Any receivable write-off requires an approval, right? Any write-offs, let's look for them. What are they? Any inventory being bought. If you guys have inventory that's being written off, what is it? What's going on? PayPal, you know, we talk about these, software, QuickBooks, security. Again, I think QuickBooks used to allow this. Does it still allow you to open a previously closed month? Does it still allow that? It does. It's probably one of the failures of QuickBooks, right? To be able to go back in and plug something in a month when it's already shut down is probably its biggest problem.
Problem is QuickBooks lets you do. That's a problem
Right.
with QuickBooks.
Right. Business insurance, we talked about that.
This is one of the things you can help the owners with. What I have some people say, they go to their insurance agent and say, what coverage do I not have? You know, because they're like, okay, I got a claim. Well, sorry, you don't have that rider. So really nowadays, I don't think people really know what's covered and what's not covered. So I have a guy who says every year, I say, tell me what's not covered.
Yeah.
Because I think they're, you know, you want to reduce your insurance, but then you don't have the coverage you have either.
Do an annual insurance summary for the owner. Sit down with your insurance agent and say, what do we have? What is covered? What are the limits? All right? What should we have? What don't we have? And make them respond to you in writing. It's your job. Make sure that your owner has life insurance. Make sure that they have disability insurance. Make sure they have an umbrella policy. How many of you know what an umbrella policy is?
Good.
How many of you have an umbrella policy? How much of an umbrella policy do you have? 5 million? 1 million? 2 million? Right. You should have that. Right?
One thing we didn't put on here, and we should put on here, cyber insurance is big nowadays.
It's a separate policy.
Yeah, no, seriously.
Separate
Yeah.
endorsement.
Yeah.
Cyber insurance is any of your files that get hacked into that are used against you or against one of your clients
Yeah.
or your employees. So let's say you have employees with payroll. Somebody hacks into your account, gets their social security numbers and date of birth. You're responsible. In Ohio, you have to report that you've been hacked. Can you imagine a CPA firm telling the public, we've been hacked? and that all of our records have been taken by someone. Can you imagine what that does to our brand and our brain? I mean, it's pretty
No,
bad.
that really is a big deal nowadays.
But
And
a
everybody
lot of
should look
you-
into that.
A lot of you don't look at this insurance. Epley insurance. Epley insurance. Employee practices liability insurance. An insurance policy to protect you from sexual harassment, physical
Or
claims.
employees doing it to employees, not just so
Right.
much you.
Not
know,
just you,
yeah.
but them, each other. Epley insurance. What's some of the biggest cases you're hearing about lately? It's that. But do you have that insurance? Did your
Yeah.
insurance agent bring that up to you? If they
called
didn't bring it
EE.
up to you, what do you do with them? What do you look at? What do you say to that agent? I say you're fired.
It's EPLI.
EPLI, Epley?
Yeah, EP. It's Employee Practice Liability Insurance.
Yep.
Yeah, you talk to your agent. Yeah, it's a lot of. It's basically some type of discrimination, is what it is.
So again, we're sitting here, and internal controls is other things that stop losses. Everything that stops a problem from occurring. Again, an auto policy we talked about earlier, insurance, okay? And then just good old-fashioned internal controls, watching the credit cards, watching the bank statements. And again, one of the things that we've been saying is you put in the system, you make the owner responsible, but you show the owner how to do it right, and you do it right. You do your financial statements on time. You do subschedules. You make them approve journal entries. You do it right, they do it right, there shouldn't be anything going on bad. You won't be blamed, okay?